What we're going to be learning about today, first and foremost, is we're going to learn how to reconcile an account. Now, this goes for both your bank accounts and also your credit card accounts. And this is something that needs to be performed every month whenever you receive your bank or credit card statement. And this is basically your way of confirming that what you've done in QuickBooks is accurate according to the bank and the credit card's latest information. You're essentially just going through and making sure that what you have is what the bank and the credit card have as well. It's very fundamental for you to do this every month to make sure that your reports have the latest information and also to make sure that everything is up to date and accurate. We also are going to talk about managing users and actually inviting employees and accountants into your company file. And that way you can have multiple people working within a company file and doing what they need to do. But we'll also be talking about closing your books, which is something that you should do at least once a year, but some people also do it every quarter or every month. So whatever works for you, and we'll talk about what closing the books entails, what it helps you with, and what it prevents from happening in the future, which is some sort of problem with your transactions being deleted or changed and things like that. We'll also be talking about reports and how to customize them and get the most out of them in QuickBooks. We'll also be talking about the different types of reports that are available in QuickBooks. So you'll be able to, well, look up information and see more information about your business. We're also going to be answering questions throughout this webinar. You can type any question into the questions area and we'll get on it. So let's go ahead and jump into QuickBooks Online. I've got a company file open in the background. The very first thing we're to do is talk about reconciling. Now, one of the things that we do in QBO, or most people do in QBO, is they sign up for online banking, and you're allowed to download transactions directly from your bank and your credit card company. And using online banking dramatically improves your reconciliation process, and it makes it all much, much easier. And I'm going to show you how it makes everything easier as we go along. But what we're going to do first is work through our banking transactions that we've downloaded from the bank and the credit card company. And we're going to do that by clicking on banking over here on the left-hand side. And this brings us into the banking center, which I often refer to as a kind of a waiting room. This is where transactions go after we download them. And while they're in the waiting room, they don't really affect anything. So if I were to look up any of these transactions that are listed right here, I wouldn't be able to find them on my profit and loss or my balance sheet just yet. That's why it's important to get them into QuickBooks first before you ever try to reconcile, because whenever you're reconciling, you're trying to confirm the transactions that are in QuickBooks versus the transactions that are on your bank statement. And if they're not in QuickBooks yet, well, then you're not going to be able to reconcile them yet. So it's important to go through here, make sure that you've added all the transactions and matched all the transactions that could possibly end up on your reconciliation. Now for us, we're going to be reconciling for our February statement, which means that any transaction that has happened from February 28th or before is going to be accounted for in this reconciliation. Anything that happens after, though, is not going to be a part of the reconciliation. So whenever we're adding and matching transactions right here in the banking center, it's important for us to get anything in that happened from February 28th and before, but anything that's happened after then is not really going to make very much of a difference because it's just not going to appear on the reconciliation. We can add them if we want to. We can match those transactions too, but they're not going to appear on the reconciliation because anything that happened before the statement any date is not going to appear in the reconciliation report. So first of all, we need to choose the account that we're going to be reconciling, which is going to be our checking account right here. And it looks like we've got some work to do because it tells us that we have 22 transactions here in the banking center waiting for us to approve and match them. That's what this number right here refers to. Each one of these different lines that we see right here represents a different transaction that we need to work through. We also see these two numbers, the bank balance and the in QuickBooks balance. And these two numbers often cause quite a bit of concern for people who are using QBO and using online banking because usually there will be a difference between the two. Now the bank balance refers to the amount of money that the bank thinks we have, and the in QuickBooks balance refers to the amount of money that QuickBooks thinks we have. Now it's actually natural for there to be a difference, because if there are transactions that the bank knows about but QuickBooks doesn't know about yet, that'll account for a difference right here. And if you ever see any transactions hanging around down here at the bottom, that's what's going to make up a lot of that difference. But also, there could be a difference between these two numbers because the in QuickBooks balance is lower than the bank balance. And the reason why that might happen is if you've written any checks out of QuickBooks, or if you've written any handwritten checks and put those into QuickBooks, then your bank balance in QuickBooks is going to be lower than what the bank thinks, because the bank doesn't know about your checks until they get cash. So it's going to be affecting the in QuickBooks balance, but it's not going to affect the bank balance until they get cash. So for that reason, you'll also see a difference. And in fact, the larger a business gets, the bigger the difference also often becomes. So just there being a difference is not necessarily a sign for alarm. So I'm going to go ahead and scroll down a bit. And whenever we look through the banking center, we're going to see two different types of actions that we can take for most transactions. We have adds and we have matches. Matches are done if you download a transaction and QuickBooks Online finds that you've already entered it. So right here we have Tanya's Nursery with an expense number 15, and it was on 1/20/2018. We spent $108.09. I'm going to click it, and what QuickBooks does whenever it downloads a transaction is it looks through your entire transaction history to see if you've already entered the transaction that it just downloaded. And in our case, it did. Right here it says that it found one record. And this is a link to the transactions that I've already put into QuickBooks. And whenever I click on match right here, it then matches the downloaded version of the transaction to the version of the transaction that I entered. That makes sure that you're not going to be ending up with transactions that are counted twice, once for when you enter them and then once when you download them. This is especially useful when we're talking about deposits and checks, because with a check, it's usually important for you to input those manually through the Create menu. That way you're able to get the check number in whenever you record it. But it's also important for you to manually record checks if you ever want to print them, because you're not going to be able to print out a check unless you mark them off to be printed in QuickBooks and then send them out that way. But also it's important for you to record deposits manually, because deposits allow you to link customer payments together. And I know a lot of you are probably ending up in situations where you're wanting to deposit several customer checks together, or several cash payments together, or even several debit and credit card payments together if it's from a merchant services company that's making a big deposit at the end of the day or something like that, linking them together. You're only going to ever be able to do that with a manually entered deposit. So those transactions are still important to enter manually, and as long as they have the same amounts and they're within a certain number of days of the downloaded transaction, they'll show up as matches right here. Now what I like to do is actually go through my matches really fast, because generally speaking, if you're able to see something that's matched right here and has a little green bar on it, you can trust it and you can click on match and clear it out. So what I usually do is I click on recognized right here, and that shows me all of my matched transactions, and it also shows me any transactions from vendors that I've done business with in the past. And so QuickBooks knows automatically how to categorize those transactions. So what you can do to clear them out really quickly is you can just select all of them with this checkbox and then choose batch actions except selected. And that's going to bring in all those matches. It's going to bring in all those transactions that are from vendors that you've already done business with in the past. And that way, we've cut down our work by more than half. We've only got 9 more transactions to look through for. So we no longer have quite as big of a pile of work as we thought we did. Now we've got some transactions in here that are adds. Adds represent new transactions that you've downloaded from the bank or from your credit card company. And whenever you add them, they're going to be brand new, and so they are going to be affecting your bookkeeping once you add them. QuickBooks is actually going to create new transactions for you. Now we've got quite a few that we need to add here. We've got this transaction, then they're sorted by date. So all the way up to this transaction right here. Now these two have happened in March. So they're not going to be involved in the bank statement for February. So we don't need to add those right now. We can if we want to, because we're going to have to add them eventually anyway, but they're not going to be required to be added at this point. So let's go ahead and work through some of these. I'm going to click on this transaction with the Hicks hardware. Let's go ahead and add this one. Whenever you click on a new transaction like this, you're able to assign the payee, and you can also assign the categorization. So basically what it is you spent your money on, whether it's an expense account or an asset account or a liability account, what have you. So in this case, we're going to say that this is for job materials. So I'm going to go ahead and put in my job materials decks and patios expense account. This list comes from your chart of accounts, which you can learn more about from the Accounting 101 class. I'm just going to select that and then select Add, and that brings that transaction into QuickBooks. So now it's going to be affecting my bank balance, and also it's going to be affecting my profit and loss statement. And whenever we go to reconcile the transaction, it's going to show up on the reconciliation report. And we can actually look at that transaction just like any other transaction in QuickBooks, because right here, it's created it as an expense. You can actually click on it, you can go to it, and if you need to, you can even alter it. But generally speaking, you're not going to need to do that with downloaded transactions, because if you get it from your bank or from your credit card company, it's usually going to be pretty accurate. So going back over here, we've got a couple more transactions to work through. I'm going to go ahead and add a couple more of these. We've got one from Tim Phillip Masonry, and this is also going to be for job materials. So I'll just put that in right here, job materials, decks, and patios, and I'm going to add that in too. And it's pretty easy to add your transactions in QuickBooks Online, and over time it actually gets easier and easier because QBO learns from the actions that you take, and it applies the same expense account that you put onto a vendor to future transactions as well. Now this transaction is a little bit different, this one with Chin's Gas and Oil, because with this one we actually went to a convenience store and we spent some money. So it's not going to be one expense account. We actually bought multiple things. You can buy all sorts of things at a convenience store. You can buy fuel, you can buy some travel meals, you can buy some burritos and nachos and all those great things that are I'm sure very nutritious. And you can also buy some lottery tickets. Why not? You gotta pay to win, right? So I'm going to go ahead and click on Split over here on the right hand side, and then right here we have multiple categories that we can apply to this transaction. So I can click my drop down arrow and I can choose fuel right here, for instance, and then I can apply the amount of money that we spent on fuel with this transaction, and then I can apply a different account here in the second spot. So if we also paid for some travel meals, I'll put travel meals expense right there, and then include the amount that we paid on that. Now, if you want to include even more lines, you can click on Add Lines right here, and you can add as many of these as you need to. Once you're finished splitting this transaction between multiple different accounts, just click on Save and Add, and that brings that transaction into QuickBooks too. So I'm going to add some more here. We also spent some money with Books by Bessie, and sometimes, and this is very rare, but sometimes whenever you look at a transaction in QuickBooks, you may need to force QuickBooks to find a match. In this case, maybe we've already entered this transaction, but for whatever reason, QuickBooks didn't find the original transaction that we already entered. What we can do if QuickBooks doesn't find the match by itself is click Find a Match right here. And whenever we select that, down comes a list of possible transactions that we can match with. And QBO is looking through a date range of transactions, looking from this date to this date, and it's listing all the transactions that this could possibly be matched up with. And QBO found one pretty quickly, which is bill payment check number 3. And all I have to do to match that downloaded transaction with the one that I've already entered is to click Save, and that forces QuickBooks to match one against the other. So even if QBO misses a match, you can still click that Find Match button and find the match for QuickBooks. Didn't find it on its own. We're going to keep on going here. We're going to click on this transaction with Mahoney's Mugs. Now with Mahoney's Mugs, we spent money on office supplies. We had to buy some mugs for the office. I'll put in office expenses right here, and then add that into. We've got a transaction with A1 Rental. I'm going to put in A1 Rental. We've rented a backhoe, and so this will be a vendor. I'm going to put that in, and this is for equipment rental. Now notice that as I put equipment rental in, it's going to put equipment rental in for this transaction and also the next one with A1 Rental, because again, QBO applies that expense account to all future transactions with the vendor. If you don't want QBO to do that though, like if you're spending money with Amazon, and Amazon could be any number of different things, you can click on Edit This Setting, basically telling QuickBooks that no, you don't want equipment rental to be applied to all future transactions with them. You want it to be uncategorized expenses. That way you can set it every time. Now, even if you do allow QuickBooks to automatically set the expense account for all future transactions, you can still go in and change it, but it just chooses that automatically for you, and it'll stop that if you click on that Edit This Setting. I'm going to click on add this one too, bring that one into QuickBooks. And like I said earlier, we can add these as well, but there's not a whole lot of need to right now because they're not going to be involved in this reconciliation. So I'm not going to bother right now. Now, one last thing that I want to mention about the Banking Center is that you can also choose to not download and include a transaction into your bookkeeping. And generally speaking, this is something that you'll do very rarely, but you can do what's called exclusion on a transaction. You can exclude them by selecting them right here and then clicking Batch Actions Exclude. Now, like I said, it's extremely rare for you to need to be able to do this. Excluding is usually only done if you're bringing over your desktop company file over into QuickBooks Online. In those cases, you might find some duplicates whenever you sign up for online banking because you've already added them in the desktop file and then you brought them over to QBO. And so QBO isn't really able to match them up very well with downloaded transactions. That's the main reason that people need to exclude transactions. So if you're not coming over from desktop, you don't have to worry about that. But excluding can also be done if a transaction is a duplicate from the bank. Maybe there was some sort of an error with the connection between the bank account and QBO. Maybe the bank sent over two of a transaction, so it's showing up twice. You can exclude one of them and then accept the other. That can also possibly happen. But again, very rare that you'll need to do this, but you can, like exclude selected, and the transaction goes away, and you don't have to worry about it being involved in your reconciliations or being involved in your profit and loss statement or your balance sheet or anything like that. Now, all these transactions that we've added and matched can be found again by clicking on In QuickBooks right here, and then they're all going to be listed. These are all the ones that we added and matched, and you can undo any of the things that you did earlier. You can also even see the things that you've excluded. So if you want to exclude any of these, you can select them and then click. You can actually delete them from here by selecting them and clicking Batch Actions. They'll delete them permanently, or you can undo your exclusion as well. But that's not something we need to do. I just wanted to show you that those tabs are available right there. Now, once you've added all the transactions and matched all the transactions from the period that you need to reconcile, then it's time to actually perform the reconciliation. So what I like to do is I like to have the statement that was sent to me by the bank or by my credit card company open in another tab on my computer, or I like to print it out and have it next to me and get like a highlighter that I can use as I perform a reconciliation. That way I can mark off transactions on the statement as I mark them off in QuickBooks as well. But in either event, you'll want to have that statement open and available to you either on paper or here in your browser in another tab. So to begin your reconciliation, go over here to the gear icon and then choose Reconcile. It's going to be underneath the Tools area. Whenever you first go in here, you'll need to click on Reconcile an Account. This is the first time use experience. This is what you see the very first time you do this. Right here, it's going to show you the basic reconciliation process. Open your statement, match your books to your statement, and then success. Your account's going to be reconciled, and that's going to make sure that you have more confidence in your reporting. And you're also protecting your transactions that are accurate. We're going to click on Let's Do It and get started. Now, there's a lot of pop-ups in this window, and so I'm going to go ahead and close all of them off, because if I don't close them off right now, they're kind of annoying. There we go. So we're going to be reconciling for our checking account. That's what we just added and matched through the Banking Center. But you can also reconcile basically any of your balance sheet accounts. Now, in general, you're only going to need to reconcile your bank and your credit card accounts. That's pretty much it. I know that somebody just asked about PayPal and whether or not you need to reconcile for PayPal. If PayPal sends you a statement, you can absolutely reconcile for PayPal as well. That's not something that PayPal usually does, but if they do send you a statement, you can also reconcile for PayPal. So basically, any account that you receive a statement for from the bank, from the credit card company, from PayPal, you can reconcile. And it's usually a good idea to do so because it's your chance to compare what's in QuickBooks against what's on that statement, which is what the bank or the credit card or the PayPal thinks you have, and they're usually right. So we're going to be choosing our checking account right here. And then right here we also have the beginning balance, the ending balance, and the ending date. Now the beginning balance is actually going to be on the statement. It's going to usually say it up towards the top of the statement, and that's how much money that we had at the beginning of the statement period. Whenever we're talking about banks, usually a statement period will be the beginning to the end of a month. And with a credit card account, it could really be any time in a month. It's usually whenever you first begin your account, that's when they start counting down. But for us, the beginning balance is going to be how much money we had in the bank at the beginning of February, because we're going to be reconciling for the month of February. Now we're able to find that on our bank statement. And it's also going to be in here in QuickBooks. We're able to see $5,000 bank beginning balance, and we can't change that. There's no way to alter it right here from this window. Now, this number could be coming from a number of different places in QuickBooks. First of all, it could be coming from the beginning balance that you set up for the account whenever you create it on the chart of accounts. It could also come from something that's automatically downloaded whenever you sign up for online banking that QBO goes back and finds for you 90 days before the date that you signed up for online banking. Basically, it's an automatically revealed beginning balance whenever you sign up for online banking. Or you might see zero. If it's a zero beginning balance, that means that you have probably not entered a beginning balance for the account. You should probably go back over to the chart of accounts and set up a beginning balance for that account. And the beginning balance is usually going to be the amount of money that you had in that account at the beginning of a year. But we also potentially have a number in there that comes from none of those things, and it could just be coming from your most recent reconciliation. Because what's going to happen here is, whenever you look at a bank statement, you see the beginning balance and also the ending balance. That tells you how much money you had at the beginning of the reporting period and at the end of the reporting period. And what happens on a bank statement is that the ending balance for the reporting period becomes the beginning balance for the next statement. So right here, I'm going to put in $407.63, which is the amount of money that I had at the end of the month, and it says that right there on the bank statement. And then next month, when I reconcile for March, the ending balance that I see right here is actually going to be the beginning balance for March. So that's another way that you might see a beginning balance in here, is it's just coming over from your most recent reconciliation. Now the ending date is also going to be on the statement. Usually with bank accounts, that's going to be the end of the month. But with a credit card statement, it could really be any day, because it's just the anniversary of whenever you first signed up for that account. Now once you've got all that information in, click on Start Reconciling, and QBO is going to move us into the reconciliation window. Now right here we see some complex looking formulas going up here at the top, intimidating looking mathematics going on here. So what I'm going to do is actually minimize this to get it out of our way. That way it's a little bit less intimidating to the screen. And then right here we see a line for each individual transaction that we've put into QuickBooks. Now I'm going to close some more pop-ups here. It's a constant battle with pop-ups. And our job in a reconciliation is to look through our bank statement. And then if we also see the same transaction that has the same amount in QuickBooks, we add a check mark. And that check mark signifies that that transaction is both in QuickBooks and also on the bank statement. So whenever we see a transaction on the bank statement, we add a check mark. We add a check mark. We add a check mark. We keep on doing that until we run out of transactions that are on the bank statement. If there's a transaction on the bank statement that's not here and we just don't see it, click on the Create menu and add it. You can add it in as an expense, a check, a bank deposit. You can add any one of these transactions directly through this window, and it'll appear right here in the reconciliation window, so then you can reconcile it once you've added it. Also, if you see a transaction on here for the wrong amount, so if you entered it improperly on the bank statement, it's for a different amount, all you have to do is click on the transaction. You can change the amount right here too. So that definitely works out as well. Now, what you might be seeing whenever you get into this bank reconciliation window is that hopefully, fingers crossed, all of your transactions already have check marks. And you might be wondering why that is and how that happens. Well, scrolling down a bit, notice that some of my transactions already have check marks. And they already have check marks because these are transactions that we added through the banking center. Notice right here that we have the Hicks Hardware and the Tim Phillip Masonry transactions that we added earlier. We also see the Chin's Gas and Oil transaction with the split for $185. These already have check marks because we added them or matched them through the banking center. And that's why the banking center is so great, in addition to the fact that you can add transactions so quickly, is that whenever you add a transaction through there and you get to the reconciliation window, the transactions that you've added and matched are already what's called pre-reconciled. They already have a check mark next to them. And that makes your life very easy for your reconciliations, because if every transaction in your bank account has gone through online banking, you're going to get into the screen and everything that is on the bank statement will already be checked off. And you'll already have what's called a difference of zero. So that's really your goal in a reconciliation with online banking, is to getting into the screen and to not have to do anything because everything is already selected. Now for us, we weren't quite as diligent as I'm sure all of you will be. And so we're going to have to go through here and check off the transactions that we also see on the bank. So we're going to go ahead and check off some of these. And notice that as I check off these transactions that I'm also seeing on my bank statement, there's a number right here that's ticking down. This is called the difference. And so I'm going to add some more of these. Notice how it's going down with each one of those different transactions. This difference is the amount of money difference that there is between what's in QuickBooks and what's on the bank statement. And our goal, of course, is to get down to a difference of zero. We don't want there to be any difference at all between what's in QuickBooks and what's on our bank statement. And as we check off these transactions, the difference in QuickBooks is closer and closer and closer. So what's happening here is that QuickBooks is adding up all the transactions that we have check marks on, and it's comparing them to the ending balance that we put in earlier. And if you want to see the full mathematical equation here, I'm going to go ahead and expand that out for us. And basically what's happening is we've got the beginning balance of $5,000. Then QuickBooks is subtracting the payments. So anything that you see with a payment right here that we checked off, when I click on this one, notice that the payments go up. And then right here we have the deposits. I'm going to click on one of the deposits. That deposit goes up. So it takes the beginning balance, subtracts the payments, adds up the deposits, and then it comes to the cleared balance. The cleared balance is the balance according to the transaction that we have checked off right here. And our goal is to get a cleared balance that is identical to the statement ending balance, because that means that our cleared balance is the same as the ending balance that's on our statement. Now I'm going to go ahead and keep on clicking on these, adding the transactions as I see them on my bank statement. Add all these, and if you see a transaction in QuickBooks that's not on your bank statement, don't check it off. I know that a lot of people, whenever they first perform the reconciliations, they think that the goal is to check every transaction, but it's not. Your goal is to check off transactions that are also on the bank statement. If they're not on the bank statement, don't add check marks to them. That's just going to cause all kinds of trouble. Now, for us, we end up with a difference of 9 cents. Differences, if you still end up with a difference after all of this, differences are usually accounted for by missing transactions. So if you have a transaction on the bank statement that's not in QuickBooks, you can add it. You could also come up with a difference because the amount on a transaction is wrong. You could see a difference because maybe the ending balance that you entered was improper. So right here, if you click on Edit Info, you can actually change that. So you can change the ending balance right here, and you can change the ending date. If either of those were entered improperly, that could cause a difference too. And you can actually reconcile even if a difference appears by clicking this drop down arrow and choosing Finish Now. And what this does is it tells QuickBooks that you want to enter a journal entry that will force the account to be increased or decreased by the adjustment amount. And that will essentially make QuickBooks accept the fact that this is the new balance. The problem is that the adjusting journal entry that QuickBooks creates is also going to increase or decrease another account on top of just the checking account for the credit card account. That other account is an expense account that appears on your profit and loss statement called the the Reconciliation Adjustment Expense account. That's a bit of a mouthful. Reconciliation Adjustment Expense account. If you see that on your profit and loss statement, that essentially means that at some point a reconciliation was performed and an adjustment was made. You want to try to avoid that as much as possible because it leads to inaccuracies on your profit and loss statement. Now, sometimes it's unavoidable, but usually you want to go back and try to find the source of that difference. Now, for us, we do our due diligence. We look at the bank statement, and we discover that this transaction that we had right here for Tanya's nursery was not for $46.98. was actually for 4689. So I'm going to change that. Whenever I do, it's going to give me a difference of 0 because now my statement in QuickBooks matches my statement according to the bank. And whenever I click on Finish Now, that's going to tell QuickBooks that everything I did is accurate according to the bank, and that way I can have more confidence in my reports whenever I look them up later. That's what we're going to be doing for the sort of the last third of this webinar, is looking at reports. Up here at the top right, you have the history by account. By clicking on that, QuickBooks gives you a report for each one of the reconciliations that you've performed. You can just click on View Report right here. Also, if any of the transactions that you've reconciled are deleted, or if anybody makes any changes to them, you can see changes right here. Usually you want to avoid as much as possible changing any transactions that have been reconciled. Because if they've been reconciled and you change them, then it's potentially going to throw off your next reconciliation. You want to avoid that as much as possible. Also, if you accepted a reconciliation that had a difference on it, it'll also show the auto adjustment right here too. Now, one last thing I want to mention, if you ever want to look up whether or not a transaction has been reconciled or not, you can do so from your registers. Let me go ahead and go over to my chart of accounts here. Now, we have registers for every balance sheet account right over here on the right-hand side. And you can go to a register by clicking on View Register. And a register is a listing of every transaction that has ever happened within an account. And they're listed according to date. So right here we see the most recent transactions and all the way down to the oldest. You can also add transactions to a register by clicking on this drop down arrow right here and then choosing a type of transaction you want to enter. But the thing that I want to show you here is that if a transaction has been reconciled, it appears on the register with an R right there. That tells you that you should probably not change that transaction in any way that involves its amount. You can change the accounts involved, like the expense account, liability account. You shouldn't change the source account, like the checking account or the credit card account. But try to avoid changing the amount. Try to avoid deleting it for sure, because that's going to throw off any future reconciliation. That's how you know if a transaction has been reconciled or not. You can potentially unreconcile a transaction also through this window, but you want to be very careful about that. To unreconcile a transaction, all you have to do is click on it and then click the R and it goes away. And then you can click on Save and that will unreconcile the transaction. But that's very rare. You really shouldn't do that very often unless you know for a fact that you've performed a reconciliation that was made in error or something. So that's reconciliations, and that's going to lead to much more accurate reporting that we're going to get to here in a little bit. Now, whenever it comes to reconciliations and making sure that everything you've done is accurate, you also want to make sure to close your books on a regular basis. So closing your books, make sure that what you've done in QuickBooks gets basically put behind sort of like a safe or a lock to make sure that it doesn't get changed over time. Because whenever you file your taxes, you're going to be using QuickBooks to generate a profit and loss statement and also a balance sheet. And whenever you report your income and your expenses and your assets to the government, you don't want those numbers to change. You want to be able to run those reports and get the same exact numbers again later on, especially if there's an audit. Because if you do get audited, they're going to expect for you to be able to generate those same reports and then look up the transactions that generate those reports. Now, if any changes have been made to the transactions that were reported to the government, you might have some problems. So closing dates helps you to make sure that your reports don't change over time. Now, closing dates can be useful for more than just that, though. They can also be used for protecting your reconciliation. And in fact, if you want to, you can close your books every month after you reconcile. And I actually do that with my own QuickBooks company file because I like to be extra sure that everything I've entered is accurate. I want to make sure that nothing gets changed over time. So you can perform a closing date by going to the gear icon and then choosing Account and Setting. And a closing date is one date. And basically, once you choose that date, everything that happened before it is now closed. And it's much more difficult to be changed. You can set your closing date by clicking Advanced, and then right here under Accounting, you're going to see an option for Close the Books. Just click on that, and right here you can enter your closing date. Now, the closing date here is usually, for most companies, going to be the end of the year. So I'll just put in 12/31/2017. So you got our closing date right here. But like I said, you can also enter a closing date that is the last day of any reconciled period. So if I wanted to, I could actually reconcile and then close the books up to 2/28/2018. That'll make sure that nothing that's been entered from that day and before can be changed. Or if we really want it to be changed, we can set up a password to protect it. And so right here, this is the second option you have right here: allow changes after viewing a warning, or allow changes after viewing a warning and entering a password. Now I'm going to go ahead and enter a password. And this is generally what I recommend you do, because if you're going to have multiple people working within a company file, you want to make sure that only the right people have access to the ability to do this. Because this is a very sensitive thing in terms of accounting, making sure that those closed reporting periods remain closed and the transactions within them remain authentic and unchanged. So I'm going to click on Save right here. That saves the closing date, and that makes sure that the transactions that are from that date and before are much more difficult to change. It's also much more difficult for me to put in new transactions that are during that period. So right now, if I click on the Create menu and I enter, if I go down here to check, let's say I'm writing a check off to a vendor, and instead of putting the payment date of 3/21/2018, I put in 2/21/2018. I'm going to put in Lee Advertising right here. I'm going to put in an expense account and then an amount, and then I'm going to try to save and close that. Now I get a closing date warning window, and I can override the closing date if I really want to. I can put in my password right here and then click on Yes, and that will allow QuickBooks to put that transaction in. But if I don't know the password, I can't do that. So if you don't give the password out to somebody, they're not going to be able to enter that. And also, if I'm looking at it, I'll probably think twice about entering that transaction that way too. And closing dates help you in that way as well. They also help to make sure that you're not making any accidental changes or adding new transactions. So closing dates don't do anything in terms of journal entries, entering new journal entries or anything like that. They don't close the books in terms of moving net income over into retained earnings. There's no need to do that in QuickBooks. But it's just a way for you to put a lock on your transactions to make sure that they don't get changed over time. Now, speaking of people who might change your transactions, there is the ability for you to set up multiple people within QuickBooks to do things in your company file. You can do so by clicking on the gear icon and then choosing Manage Users here under the Your Company setting. And in this window, you can add a new user, or you can also invite an accountant. And the accountant, you can have up to 2 accountants. They can log into your company file at any time. They can add transactions. They can edit transactions. They can do what accountants need to do. They can run reports. And for the accountants out there, this is a great way for you to work with a client, because if you are invited as the accountant, you can log in. What's really cool about it is that whenever you log into your own account, you'll actually see a listing of all of your clients. And you can click on any one of their company names to actually zoom into their company file. And it's a great experience as an accountant. And this makes it much easier for you to work with your clients, because you don't have to go over to their offices. You don't have to trade company files back and forth with Dropbox or anything like that. You just log into your computer. And as long as you have access to the internet, you can do it. But right here, we also have the ability to add other users. Click on New. And you can set up, you might actually see this. This is probably a good thing for us to talk about. You might see a pop-up blocker. And if that's the case, you can click on this little option right up here, pop-ups were blocked on this page. Just click on that, and then we're always going to allow pop-ups from this site. And then it's going to refresh, and we're going to get that pop-up window. Now, I'm not going to spend too much time on this because it's pretty straightforward how to set up a new user. But I just want to mention that there are 4 different types of users: regular, custom, company administrator, reports only, and time tracking only users. You can have as many reports only and time tracking only users as you want to. You're totally unlimited in the number of those. But regular, custom user, and company administrator, you are limited by the number of users you're allowed based upon your subscription status. So if you're a QuickBooks Online Plus user, you can have yourself plus 4 other users from up here. You can have, if you're a Simple Start, you can have yourself and just yourself. Online Essentials has yourself plus 2 users, so it's determined by your user level. But company administrators can basically do anything in a company file. They can add transactions, they can run payroll, they can look up reports. Regular custom user, you can set guidelines for them and set up roadblocks for them as well. Because whenever you select that and then click on Next, at this point you can then choose all access, or you can limit their access to just customers and sales or just vendors and purchases. And there are other additional administrative options whenever you click on Next to restrict their access to different parts of QuickBooks Online. But in general, those are going to be your big abilities for you to limit their access. So set up your new users through here so they can access your company file both through their computers and also potentially through their phones if they download the QBO mobile app. Now, the last thing I want to talk to you about in today's webinar is reports. And the way that reports links up with the rest of the things we've been talking about is that reconciling ensures that your reports are more reliable. And being able to rely on your reports to give you the information that you need is very important in QuickBooks because essentially reports are the main reason that you use QuickBooks to begin with. You want reports to be able to file your taxes. You want reports to be able to look up and see how your business is doing in terms of your sales, your expenses, and really anything else. So we're going to run a couple of reports here, and I'm going to show you the differences between them. So first of all, we're going to talk about what the 3 different types of reports in QuickBooks are, because every report falls into one of 3 different categories. There are list reports. This is the most basic type of report in QuickBooks because all it does is list data. It doesn't have any analysis going on. It doesn't add up any numbers, nothing like that. All it does is list information. So right here for the customer contact list, we ran this report. All it's going to do is it's going to give us information about our customers and how we can contact. It's not going to show us the balances or our sales with them or anything like that, but we're able to see all the information about our customers for their contact information. You can click on any one of their names to go zoom into their record on the customers list as well. So right here we can see Amy's bird signature. Going back over to reports, there are some list reports that give you transaction data. So right here, the invoice list, for instance, this report does list your invoices over whatever date range that you input up here at the top of the report. But this report does not have any analysis. So even though it lists all of your invoices and it lists the basic information about them, whenever I scroll down to the bottom, I don't see a total down here at all. So list reports are useful for looking up information very quickly, but they're not really useful in terms of analysis or finding out any deeper meaning or deeper numbers within your company file. For that, you're going to need either a detail report or a summary report. Now, detail reports allow you to see the same data that you get from a list report, but they add the analysis. I'm going to go ahead and run a report called the Sales by Customer Detail Report, just to give you an example of what a detail report looks like. Now, this report is useful if you want to find actual transactions that have happened over a period of time. And the period of time is determined by the date range that you enter up here at the top. And then scrolling down, a detail report shows you each line of every transaction that you've had within that date range that matches the parameters of the report. This report is showing us sales transactions. So we're only going to see transactions that are considered sales, like invoices, credit memos, sales receipts, and refund receipts. And it's showing us every line of those sales transactions. And here's the analysis part. It's dividing them up by customer. So we're able to see the customer's name, all of the lines of the transactions that were sales, and then the total amount of those sales. So it's like getting the data from a list report, but also getting the analysis that we need as well. You can click on any one of these individual lines to zoom into the transaction. What's great about this is that you can actually look at the name of the report and tell exactly what it's going to give you. Sales, the sales transactions, by customer, because it's organizing them by customer right here. And then a detail report is giving you each line of every transaction you've had over the date range. Now, it could be, though, that a detail report is giving you a little bit too much information because they can get pretty long. So what you may want to look for is a little bit shorter of a report that still has the same data or that still has the same analysis but less data. So in that case, you would want a summary report, because summary reports don't list each individual transaction like a detail report, but it still tells you your total sales over a period of time or total expenses over a period of time for your customers, your vendors, or what have you. I'm going to run a sales by customer summary report because we've already seen the detail version of this report, right? Now we're going to take a look at the summary report and see what the differences are. Now on the summary report, I'm going to go ahead and change the date range right over here because on my sample data file, I don't have any sales for this period. We have sales by customer summary. And so here we're able to see the same basic information distilled down to a single number, which is right here. Now we saw the same number earlier on the detail report, but we also saw each individual transaction that made up that amount. You don't get that on the summary report. But if you click on the number here on a summary report, it then drills down to a detail report to show you the individual transactions that are available there and actually make up that total. Now, summary reports are by far the most commonly run reports in QuickBooks because they give you a lot of data really quickly and they make it really easy for you to read. What's more is that there's more ability for you to analyze these numbers by adding columns and also customizing them further with filters. So right up here at the top, we see some options for columns. And for the display columns by, right now we're only seeing a total, but you might want to see your sales or your expenses or your profit and loss or what have you divided up by a different metric. Maybe we want to see our sales by month. What I'll do is I'll click my display columns by drop-down arrow, and I can choose between all of these different criteria. Now I'm going to choose months, but you can also choose between days, weeks, quarters, years, customers, product, services. With the months option and then running the report, we can now see our sales divided up by customer and then also a cross-reference right up here at the top by month. And whenever we scroll down, here we can see the totals for each month as well as the totals for each customer over here on the right-hand side. This is also available on any summary report. So if you're running a profit and loss report, you can do it. If you're running an expense report, you can do it. It's just a great way for you to divide up the numbers that you're looking at. We also have the ability, though, to add comparisons whenever we're looking at a report. So what I'm going to do right now is I'm going to run this report for this year. So we're going to see our sales by customer for January to December 2018. But I want to see my 2018 numbers compared to my 2017 numbers. So what I'll do right here is I'll use this compare another period option. Click the drop down arrow and we have previous period, previous year, year to date. I'm going to choose previous period and then also turn on the dollar change and the percentage change because what I'm seeing right now is this year. I want this year compared to the previous period, which is the previous year. And then I'll run the report. And now I'm able to see my sales for 2018 versus my sales for 2017. And one of the big advantages of using QBO over a longer period of time is that you get access to more and more reports like this with a whole lot more data. So if you have 10 years worth of data in QBO, you can run these great reports that show really the growth of your business over a long period of time. So using QBO for a longer period of time definitely gives you greater and greater reports over that time. We also, though, have the ability to enter previous year. Now that's a little bit confusing because we're looking at this year and then also previous year. So instead of looking at the previous year and with this year turned on, I'm going to demonstrate that by looking at, say, we're going to look at January. So I'm going to change my date range right here to January. And what this report gives you the ability to do is set the date range and then choose the previous year. And this is really great for seasonal businesses because you're able to see how much money you made in January of 2018 versus January of 2017. That way you can compare period and see growth or decline in numbers as well. You can do this again with a profit and loss statement or expense reports or anything you need to. And you're able to see the dollar change, the percentage of change. Finally, there's also a year-to-date option. So if we want to run a report like this that shows us our sales for January 2018, but we also want to see our sales for this year to date, we can run this report, and this is going to show us January with this year to date. And I'm going to go ahead and change this, I'm going to change up the dates a little bit. I want to see, let's say March, just to show you a little bit better about what this report can do. There we go. So now we're looking at March's sales versus January to March of 2018. So we haven't had any March sales, but we're able to see better of a comparison right there, and it also has a percentage of year to date. So you can run these reports to compare different periods of time against one another. Now, the data that QuickBooks uses to build these reports is also something that you can change. Right up here I'm going to change my date range back over to all dates. If we click on Customize right up here at the top right, right here we have the general information. This is where we select the date range, the accrual method, which you learn more about if you take the Accounting 101 class. It's actually coming up later on today. And then there's divide by 1,000 if you're dealing with really large numbers. You can change how negative numbers are displayed. But one of the big things that we see here in the customization window is filter. And whenever QuickBooks builds a report, it takes data in the form of different data sets, like customer, product and service, payment method, crew number. These are things that are on your transactions. And based upon these filters, it builds the reports that you're looking at. Now, if we don't want QuickBooks to include something in these reports, what we can do is apply a filter. So we just click on the thing that you want to filter, and maybe we only want to see reports that show us sales for sod, which is one of our products and services. Right here, I'll click my drop-down arrow. I'll find sod on this list, which is right here, and then run my report again. And now we see sales by customer summary for all dates, but it's just for sod sales, and that's it. Now, whenever we look at a report like this, we can also change the name of it, and it's very easy to do. So just click on the name, and right here you can change the name. So I'm going to change this to sod sales by customer summary. Click on any of the white space, and QBO saves the name. Once you run a report that you like and you want to run over and over again, or even have QuickBooks email to you on a regular basis, you can click on Save Customization up here at the top right. And this allows you to set up the customer report name, as well as set up a report group potentially, or share it with other users. And whenever you save that, you can access that same reports at any time by clicking on Reports and then Custom Reports up here at the top. Just click on the name of the report right here, and it'll open it up right back up for you. And the great thing is that if there have been any more sod sales, because this is for all dates and my sod sales, these numbers will update. So this is not a snapshot. This is actually a living, breathing report that'll change over time if we make any more transactions at that time. One last thing I want to talk to you about here is that QBO, because it exists in the cloud and it doesn't require you to run it on your computer, it can actually do things while you're not even looking at it. One of the things that it can do is it can email you reports. So we can program QuickBooks to email us any of the customized reports by clicking on Edit over here underneath Action. And when you edit a report like this, down here in the middle of the screen, you have Set Email Schedule. I'm going to turn that on. And right here, we can set up an email schedule for this report to repeat either daily, weekly, monthly, or twice a month. And you can even have it skip days, weeks, or a month as well. And I'm going to have this emailed out every month on the first of the month. And we can also choose an end date. If you want it to end by a certain date or end after a number of occurrences, you can do that too. And then right here in the To field, you enter your email address. So we're going to go ahead and put in mine. You can put multiple email addresses, just put a comma in between them, or you can click on CC to have carbon copies. Here's the subject line of the email, the body of the email, and you can have QuickBooks attach the report as an Excel file in the email you send out. Send and close, or save and close rather. And that report is now programmed to be sent out on the basis that we put in to QuickBooks. Now that report is going to be sent out on midnight on the Pacific time zone, so basically in the middle of the night. And I guess you could look at that in two different ways, right? On the one hand, you can say, well, they're going to get the email and they're going to see that it came to them in the middle of the night. So, hey, it looks like you're staying up all night burning the midnight oil. It could also look like you procrastinated until the end of the time period that you could possibly send it out. I guess it's the glass half full. half empty sort of a situation right there. It could be eat, you could be read either way, but it gets sent out in the middle of the night, and it's there waiting for them in the morning whenever they want to read it.